Hello, ladies and gents. Rod and Dima here, back with another show of ours, Conundrum. Today is Sunday, and it's the 20th of November. The winter is coming, and we wanted to discuss this piece of analytics found on Zero Hedge. And today we're looking at this little piece on Zero Hedge called Do Gold Prices Go Up in a Recession? Quite a lot of arguments, but I think the main issue that the author is facing, and I think the main issue that he's wrong about, is that he is looking at the situation that gold and stocks and other financial assets was facing in the past 40 years, in the past 35 years. So in the period of the great moderation, but things might change drastically in the not too distant future. So we should consider that as well. And of course, not to forget that gold cannot cost nothing. That is one thing. And it has no counterparty risk. It is good by itself. And I placed the link to the article in the description of the video below. So, Rod, what are your thoughts on the uselessness of gold during recessions?
Well, I've always been a fan of gold, going back to early times, because gold is such a fascinating product. And every piece of gold that's been mined in history, going back thousands of years, still exists because gold is indestructible. I learned very early on that gold is highly liquid, that you can always sell gold in good times and in bad times, because it's a universal asset that crosses borders, crosses countries, and crosses everything. From going to a pawnbroker, you can get instant cash. You can go to a coin dealer. You can go to a jeweler, and they will give you instant cash based on gold. So in a recession or even in good times, if you need cash quickly and you possess gold, then you have a liquid asset.
Right. So when it comes to recession, the argument of this article is that gold didn't really show good results. If we look back 5 years, 15 years, 20 years, what are your thoughts on that?
Well, Dima, I was in New York at a meeting of the New York Stock Exchange Consultative Committee and speakers. And one of the major speakers was the former Chancellor of the Exchequer in the United Kingdom, Gordon Brown.
Oh, yes.
Yeah, at
the brown button fame, yes.
Yeah, in 2000. And at the time, gold was languishing at around $299 to $300 an ounce.
It was the year 2000, right?
That was the year 2000, yeah. I was living in New York at the time. And I was actually there as a guest of one of the lobbyists on behalf of the World Gold Council. He thought, as a financial journalist, I would be interested in hearing what he had to say.
Right.
The Chancellor of the Exchequer. Well, surrounded by people who were more knowledgeable about gold than I was from the World Gold Council and the lobbyists, I listened intently to their reaction and response. And their major reaction and response was he was going to sell the majority of the reserves, British gold reserves of the UK Treasury, I think it was some 500, 600 tons, and convert that money into euros, which the euro was just about to become a pan-European currency. Well, pan-European, to as many of them had actually signed up. Now, if you imagine it was 2000, right, at $300 per ounce. We sit here in November the 20th, 22 years later, and gold is languishing at $1,750 per ounce. Now, you can look at the way that the stock exchanges, etc., have gone, but that looks like to me, one hell of an investment that is, although it hasn't given you any interest, it's maintained not only the value of the 300 to 400, doubled, not even treble, but done much more than that. So I think that proves that holding on to gold in the long term works. And that's taken it through from 2008 with the great liquidity crisis, and when it actually, and after that to 2012, when it was actually up at around 1900.
Yeah, you're absolutely right. And this is somehow missed when people discuss gold as if it's, as if it's standing still. And if we look even more back to 1971, it was 42.22, if I recall.
No, 1971 was when the Nixon took the Americans off the gold standard, and it was actually $35, which was the dollar was convertible to gold at $35 per ounce.
Right. But I think they revalued it on the balance of the treasury at $42, right? If I recall. Yeah. So I mean, calculated the way you want it. Divide 1,750 by 35 or by 42. It's still pretty good, It's
it's an excellent return on investment if you just sat tight with gold from that time. Okay, you haven't earned any interest, but you haven't lost any money, and it hasn't lost its store of value, and it still has, as I mentioned earlier, a high level of liquidity.
Right. No, absolutely. And the author also says that, well, he mentions recessions, and there are recessions, and there are recessions, and there are depressions. So might there be a situation when coming economic slowdown will be so severe that it will all the slowdowns that we had before in the past 35 to 40 years will pale in comparison?
Yes, I think that's very, very significant, and it's about to happen. It's almost like Europe has hit a perfect storm, and the US to a lesser extent, but Europe particularly. Its deindustrialization will happen by cutting off fossil fuels from Russia, and there is not sufficient fossil fuels available in other parts of the world to actually replace what they were getting from Russia.
Right. So and it's related not only to Europe, but to the United States as well, and China and other countries. I'm pretty sure,
I think that the West is going to suffer the most because they are more reliant on energy, imported energy, and they don't produce enough, and the cost gets to prohibitive levels. I mean, they've already swapped this year Russian pipeline gas, which was on average around $350 per 1,000 cubic meters, for US natural gas as LNG shipped from America, which is well over 1,000. So you're looking at gas that is 4 times the price, and the energy in for companies like BASF and other heavy industrial users means that their industries are just non-competitive on a world market, and they will lose money producing goods.
Right. No, you're absolutely right. And we shouldn't forget the great pile of debt that is, is great overhang that is not to be. There's nothing to be done with it, really. You cannot get rid of it.
No, you can't inflate it away. It's impossible to inflate this level of debt away. This is the way that countries used to do it in the past, was inflate away the debt. This happened in the 1970s when inflation was rampant around the world. I mean, I remember in the UK when I was growing up, annual inflation rates were around 25 to 30%, and that was considered normal. It wasn't until the 1980s, under the policies of Reagan and Thatcher in America and in the UK, that inflation was actually brought under control. Right.
Yeah. And the demographics were excellent at the time in the 70s because the boomers were just entering the workforce and all over the world. The demographic situation was incomparable to what we have right now. We have a demographic depression, a die-off, really. So yeah, it's
well, it's also you have a large number of older people.
Yes,
whereas
yes,
for
yes.
that's in the West, in the
In China,
South,
in Russia as well, everywhere.
yeah.
Everywhere.
In the global South, the opposite is there are more young people than old people in Europe and including Russia, and in the US.
You see, India just crossed the 2.1 children per woman threshold, which is like the death threshold for a country. It's the rates of birth are falling all over the place in the Muslim world. It is a very bad situation in Indonesia, in Iran, for example, in Saudi Arabia too, as well. It's a global thing, so it only exacerbates the situation in the West. So. Yeah, it's bad. I mean, when everything collapses, as it inevitably will, don't you think that gold will have some kind of value? Maybe
gold. They keep talking, and at the moment, there's been talk through the BRICS, through the Shanghai Cooperation Organization, etc., about a new benchmark currency based on commodities, with gold among the main part of the commodities, that a new type of currency value will be set. And I think that makes a lot of sense because fiat currencies like the American dollar, which is used in the majority of business-to-business transactions across countries and across the globe, gives America a free pass to keep on printing money. It's not backed by anything, and there has to come a point when there's a loss of confidence.
Yeah, absolutely. Yes, I think gold is a sure bet these days. That's no doubt about it. Physical gold, gold in your hand. That's very important to remember.
I think it's very different from what they talk about when they talk paper. I mean, the amount of transactions at the LBMA and the stock exchanges in America, etc., is huge. There's more transactions for gold takes place paper-wise in a day than has been mined in the world in history.
Yeah. They sometimes have these days when it's like 3,000 tons of gold goes around this exchange in a day or two or something. Yeah.
Yeah, I mean. And there is only a finite amount of gold. I mean, Russia is the second largest gold producer in the world. This year, it will be around 330 tons mined. That's not using in recycled and scrap gold and gold from other sources. So they're second, and China at just under 400 is the second largest. Is the largest. So you're not only looking at around 2,500 to 3,000 tons of gold mined annually.
I hope we convinced you to have a little bit of that shiny yellow metal in your pockets, under your bed or somewhere, or taped somewhere to your, I don't know where. You think about it. Thank you, Rod. Thank you for the interesting conversation as usual. This was Rod and Dima with Conundrum, and please subscribe, like us, and see you soon.